Eric Muathe, Muathe.com, with another brief educational video. Let's take a look at this stock here, which was down about 25% in the past week, and see what happened here, and we can see whether we can learn something out of this. Number one, we can see here on the weekly chart, about sometime in late 2015 in November, you can see that the weekly RSI jumped below 30.9. So that was your first idea that the stock was not trading well. So we can see that off the bat here. If I take a look at the daily chart, you can see a couple of points. In fact, coming off the highs here, we see that we made an improvement in highs, moving to new highs. While that was taking place, we can see here that the RSI made a slight lower low. And it's important to note here that at this high here, which corresponds with the stock high, the RSI failed to move above 69.1. And then also we can see that there was another break, and this break coming off the high somewhere around there. On hindsight, it broke down here late July, and that gave us this move. We haven't been back to those levels since then. We can draw a line from here, and this line so happens to be again at another critical number at about 61.8. And since then, you can see resistance at that level with uniform activity gave you that high at $20. Double top resistance here in November gave you that top level. We haven't been back to those price range since then. Take a look also at the previous short-term break point. So you come here, you draw this line here. Once we broke down during this move there, you can draw a line from there, and we can see that this break point turned into a resistance band. So if you use the RSI there, that break point became the resistance band here, which gave you this resistance, and now we see this plunge. Now, so the stock has been bearish for a while, and we can see this drop on the last trading session here also corresponds with a move below 30.9 on the daily time frame. Now, if you take a look at the monthly, it becomes a little bit clearer. You can see after making this low here, and keep in mind the stock had already moved to fresh 3-year lows, so it was already a risky hold. It broke down here to fresh 3-year lows during this plunge. So this plunge does correspond with the ultimate Muathe Sell Signal there. And now what we are seeing here is, let me take that off. We see that we had a closing low. You got one positive month, and that positive month was a rest period, and then now you have a continuation on the downside below the previous monthly closing low. So on a monthly chart, you only need 1 month of rest, and here we see that on the third month there was a continuation of that move lower. So again, once it moved below $10, which was the previous monthly closing low, that was a sell signal. And we can see here what happens when a stock is moving below 38.2 for the first time in more than 3 years. So that move below 38.2 on its monthly RSI tends to be a little bit of a tricky spot because the stocks tend to plunge. And as you can see, that plunge corresponds nicely with the other parameters we look for, which is MACDs moving to 3-year lows. Here I have 2 MACD settings, and both of them are below 0 and also moving to 3-year lows. So this one was always a risky trade, and now the risk could be that should it continue lower and crack below 30.9 on its monthly chart, that's going to be another additional red flag. Eric Muathe, Muathe.com. As always, be careful out there. Peace and blessings. ESS. Yes. Mwah.